In this video, I'm going to share with you a powerful and simple candlestick pattern that will transform your trading. Hi and welcome back to Mindfully Trading. If you're new here, my name is Emily and on Mindfully Trading, I share educational tips relating to day trading Forex as well as an insight into my journey as a Forex trader. I originally started trading about 6 years ago with Warrior Trading when I day traded the US stocks. Since then, I have transitioned to day trading Forex and investing with stocks. And in this video, I'm going to share with you a powerful candlestick pattern that will really help you to decide on the trades that are worth taking, as well as a recap of a trade that I took in the live markets with both my account and my account with the prop firm, the 5%ers. As always, all of the software used in this video will be linked below, as well as a link to a free trading plan. So make sure you grab a copy of those if you've not got one already so that you can make some notes. Remember to hit the like button and subscribe to the channel, and let's dive into the video. Okay guys, so I've just loaded up my account here in MetaTrader 5. This is the account that I am trading with the 5%ers, and I've just gone into my account history. We're going to be looking at this trade that I took here on the 20th of February, which was a trade that I took trading pound dollar. Before we get started looking at the candlestick pattern, let's just have a look at some of the background that was going on that day on the Tuesday. So the start of the day, my usual process in a trading day is to check out any upcoming news. Very important for any kind of day trading strategy, especially for me for this day, as this was a scalping strategy. So I'll just go onto the calendar. This is with Forex Factory. It's a brilliant resource, it's free, and this is where you can check out any upcoming economic news. Looking on the Tuesday here, you can see that there was already some high impact news released for the Australian dollar. And then in the afternoon, there was high impact news release for the Canadian dollar. But as I was day trading pound dollar, I'm looking specifically for any news relating to the Great British Pound or the United States dollar, and there wasn't anything out that day. In fact, the day before was actually a bank holiday for the US dollar, so I didn't trade that day either, which meant that the trading decisions that I would be making on that Tuesday would be rooted more in technical analysis rather than fundamental analysis. However, as you can see, as the week progresses, there's actually quite a lot of news out this week, particularly for the US and for the pound. There was flash manufacturing news and also unemployment claims. There's been quite a lot trickling in this week. Once I got an understanding for the fundamental analysis, I then jumped onto TradingView, which is the charting platform that I use for my technical analysis. I carry out all of my analysis on this platform, and I also plan my trades, and then I simply execute the trades in my MetaTrader platform with my broker. So I'm going to use this really handy bar replay tool, which allows me to go back in time and remove the candlesticks going back to the Tuesday, the day that I took the trade. I still need to add a few indicators to this chart, so I will do that now. There we have the previous daily high and low indicator, and here sessions indicator, and finally the indicator that shows me institutional price levels, which are basically set at the whole and the half pounds. As per my day trading strategy, I carry out top-down analysis. I'm not going to do that in this video, but I have created a separate video that talks more about that, so I'll include a link to that above. But without having to jump onto a larger time frame, we can simply just zoom out on the 5 minute to gain an idea of what the top-down analysis would tell us. Because we've got these vertical dashed lines, they highlight session breaks, which means that each one of these represents a day of data. So this first one will be the Wednesday, Thursday, Friday, Monday, and then the current day, the Tuesday. So we can see that price has been in this little short-term uptrend, making higher highs and higher lows. Now zooming in on the current price data, I'm going to just place a line here to indicate that that was the current daily open. Which means that when I looked at the charts during the London session Tuesday morning, price was actually in the red and we were trading underneath the open. But overall, using top-down analysis, if anything, I was more long biased based on the technicals. So this was quite an interesting setup for me, because if I wanted to buy and price is down, then that's already looking to be a good place to buy. But how do I know that price is going to go up and not going to go down? Well, this is where this series of technical analysis comes in. So first of all, I'm looking at this indicator on the bottom. This is the previous daily low. And if we got a strong break of this level, it could indicate that price would continue going down. However, during the Asian session, we did get a break. It wasn't that strong. Price kind of broke down. Price broke down, it consolidated a little bit, and then we broke back up with momentum. And it's almost like it's testing the waters underneath this level, and it didn't quite like what it's finding. Then the London session opened at around about 7 o'clock GMT, That was when Europe was waking up. London opens around about 8 o'clock. So we started to get some volume coming in. Now, once again, price drops down to this previous daily low key level, and it makes this very interesting candlestick pattern. And this candlestick pattern is called mirror bars. If you're not familiar with what mirror bars are, let's have a look together now. As a quick demonstration for you, here I've drawn out some candlesticks, and let's assume that the market has been coming down. Now, the way that mirror bars work is we look at this most recent candlestick here. This is a very strong bearish engulfing candle because we had the open here. We've got a short upper wick, so price did retrace a little bit, but then price pushed all the way down. We've got a short lower wick, and then the price actually closed near the low of the wick, which means it's a very large body. That means that there's strength to the downside. But the way that mirror bar works is the next candlestick opens at the low of the previous candlestick, and it pretty much does the opposite. So it opens at the low here. We have a little wick at the bottom testing the areas that the previous candlestick did, but then price surges up, which turns this into a bullish candle because it's rising above the open. Price is going up. We then have a small upper wick here where price is pushing up, but it closes near the highs. So it's basically the same as the bearish engulfing candle, but this is a bullish engulfing candle. And the key is having these two candlesticks next to each other, because it means that price has basically been going down, didn't really like what it found, surged back up. And as long as the bodies of the candlesticks are basically closed together like this, or even better, if the bullish one is higher than the previous, that means that there's more pressure pushing up, there's more buying pressure. So returning to our initial price chart, you can clearly see here these two candlesticks are mirror bars because we've been coming down. We had this bearish momentum candle down, and then immediately a bullish candle pushing up. And the interesting thing with this bullish candlestick is that there's not even a lower wick, so price didn't even test the lows, it just went straight up, and it's got a very short upper wick, so price is definitely pushing up with strong bullish momentum. And one of the key things to remember about this pattern is I don't recommend just trading it blindly. Whenever you see mirror bars, don't just get in, because obviously these are only powerful in the context of a trading plan. And the more areas of confidence you can bring into that plan, the stronger it's going to be to justify taking a trade. So for me, the reason that this was a powerful candlestick pattern is because it was in confluence with different things. It was present at the previous daily low, this key level from the daily chart. So it was showing a clear rejection of this level. It's in the context of the time period during the London session when there is high volume. And it's in the context of my previous fundamental analysis and the fact that I am long biased. So once I saw this candlestick pattern form here, that was my indication to set a long position. I used a 10 pip stop, which was just below the low of the day, this ranging period below this key level. So I felt like that was a good place for a stop. And my initial target was 1.5R, just above this institutional price level here. And as you can see, price thought about it a little bit. We had another retest there, but eventually it went up to my target, and it hit my target within about 25 minutes. So this was a really nice trade taken utilizing this powerful, simple candlestick pattern of mirror bars. So I took that trade in my account with the prop from the 5%ers, and I've just loaded up my dashboard here. I don't always show this because, to be honest, I don't always check this out, but it's quite good to just have a look at how the account is developing. So I'm currently in one of their funding programs, the instant funding program, where I am adhering to their rules and aiming to reach their profit target, which for this program is 10%. That means that once I hit 10% profit on my account, I pass the challenge. And at the moment, as you can see, I am currently working my way towards that target. It's quite handy to have a look at what statistics it gives you in here, so you can see the amount of trades taken, what were profits, what were loss, and the profit factor. So at the moment, I'm keeping quite a nice 2.6 ratio here, which means that my profitable trades are larger than my losers, and I've got a 61% win rate. So it's not a brilliant accuracy rate, but it doesn't need to be. It's still profitable, and that's what I'm aiming for. If you're interested in finding out more about the 5%ers, I do have a link below in the description where you can get some more information, find out about their programs. They have 3 programs available from their website. So as I said, I'm in their hyper growth program, which is an instant funding program. That means that once you hit the target, you are instantly funded. You don't have to pass any further challenges. But they also offer 2 extra programs. They've got the High Stakes, which is a 2-step program, and Bootcamp, which is a low-cost program. So if you're limited on your budget, that might be a good start for you. For me personally, I'm just really enjoying taking these simple, consistent winning trades, working away at my account, heading towards that profit targets, and that's why these candlestick patterns are brilliant to bring into your trade analysis to help to confirm A quality trades. It's all about taking A quality trades, taking the best and leaving the rest. If you've enjoyed this video, please let me know by smashing the like button. Don't forget to subscribe to the channel below, and I'll catch you on my next video. Thanks for watching. Bye.